Hello everyone, Brian Hartstein and Andrew Fell with Baintree Wealth Advisors. It's hard to believe we're already in February and hitting tax season of 2022. Looking forward to a safe and prosperous and healthy year for everybody. And so Andrew, as we got to the end of 2021, a lot of questions we have from tax practitioners and clients are in the Roth area. Backdoor Roth, mega backdoor Roth, we have legislation. People weren't sure what was passed, what we could have done for last year, and what we should be looking at in 2022. So we thought we'd take a few minutes and try to provide some valuable input for the CPAs out there as we hit tax season. They're working with clients on what we can do.
So what we know to be fact is that the Build Better Back never got pushed through. Typical government for you. And so the questions we've been fielding, part of that legislation was in regards to the backdoor Roth and the mega backdoor Roth. So first and foremost, at this point here in February, on the books, the law says we can still do them. Now there's a caveat there that could happen where if something does get pushed through this year, which is again up in the air, will they make it retroactive? That's tough to do, but it's legally they can do it. So let's talk about the backdoor Roth that a lot of your clients may have some questions on. So the backdoor Roth, Brian, means if we have over an income threshold, so we can't contribute to a Roth, and right now is a joint filing, it's a little bit over 200,000, 204 to 214 before it phases out. So what it allows somebody to do is contribute to a traditional IRA, and in this case, it would be non-deductible. Ultimately then, within a period of time, and most of the time you want to look at doing it within 30 days, then they will convert that to a Roth. And if it's done in a manner where there wasn't a lot of gains in the account, then it's done where the money itself will come out. They won't pay the taxes on it because it's non-deductible, and then they get to put it into the Roth. So in theory, great, but the one thing you got to be careful on is the pro rata rule, and that's something we can go into a little bit more detail, but the pro rata rule is where a lot of clients don't think it through. So if they have other IRA accounts, the backdoor Roth may not work. So be careful on that.
Good point. And the big point of confusion we find is between the backdoor Roth and the mega backdoor Roth. One has to do with personal planning. One has to do with a qualified plan and 401k planning. So we see a lot of confusion there.
So not many offer this, but if in a 401k plan, as we do a lot of those, inside of some of these plans, they allow for, of course, the pre-tax, and now more and more are allowing for the Roth. So that's your normal where you could put away $20,500 or now up to $27,000. But there's a certain max, right? And the max itself, whether there's a business owner or in this case, if the actual plan allows for additional after-tax contributions up to the limit. So that's the key. Does it allow for that? And if so, does the plan allow for a conversion within the plan? So there's definitely some moving parts to it. But in theory, the mega backdoor means that your clients can contribute to the regular 401k side, and then if they can do the after tax and they can afford to, and all the different rules that are set forth within the plan, it allows them to put in as about $58,000 to up to $63,000 is the max.
That's the DC limit, but we may be looking at just the $415 limits for the contribution, but that's what makes it mega, right? It's bigger than the contributory one we could do at the personal level. So that's where we see a lot of that confusion.
And then once that's contributed as a non-qualified, then the key is to convert it to the Roth. So again, moving parts, but if you think about it, allows a high-income employee to contribute to the regular 401k or the Roth portion and then put the money in after-tax and then move that after-tax over to a Roth. So it isn't for the faint of heart. It's, in theory, it sounds easier said than done, but it is still available. And at this point, will that change? Potentially. So that's the big caveat. Will they make it retroactive? We don't know. We just wanted to give you kind of where we are right now. And obviously, if you have questions on this is something that we live and breathe, and we can help make sure that you're providing the right information to your clients.
Absolutely. So if we can be at all of help or a resource to you during tax season, please reach out and find us. We are here for you to help. So thanks again. Hopefully we'll see you at the May event. It's going to be a good one. Glad to see everybody back in person, and we're looking forward to hopefully getting you through tax season.
Good luck the next couple months, and we'll see you all in May. Thanks so much.
Take care.
Bye-bye.